Dow is up 1.3%, solid gain there. You're very close to 50,000 on the Dow. Goes up a bit more and you're hitting 50K. The S&P is up 1.2%. The the NASDAQ, that's up 1.4%. Green across the board. And look who's with me now. Ted Thatcher joins us to cover this market for us. Look, I've been saying that this is an AI market, it's an earnings market, it's a lower oil price market, and it's an idea that maybe the war is winding down. That makes for a solid rally, doesn't it?
It absolutely does, Stuart. We're seeing green across the board here, and we're seeing it led, of course, kind of in the same narrative we saw a lot in 2025, that concentration. Last year it was the Mag 7 companies, but I totally agree with you. It's really driven by the constraints in the AI economy. That $750 billion of CapEx spend has to go somewhere. So you follow the money and it's driving demand and prices higher.
Is there still a buying opportunity in some of these big techs, which have already gone up very significantly?
Absolutely. You know, I think when we look at the markets today, we just have to be looking in the right places. You know, there's two names of the big tech companies that actually stand out to me where this phrase will apply well. Charlie Munger always said, if you just bought amazing companies on the 200-week moving average, you would drastically outperform the S&P 500. The problem is, most people don't have that kind of discipline. And if you look at both Oracle and Microsoft right now, they're not exactly at their 200-week moving averages, but they're very close to them, and I think that that'll present an opportunity for investors.
Oracle and Microsoft are buying opportunities to you?
Yeah, absolutely.
You know, look, I own a thin sliver of Microsoft, as most of our viewers know.
As I know.
Everybody knows this. And I've been seeing this thing come down. It has a modest blip up every now and again, but it's still close to $400 a share. Why is the market wrong?
You know, it's really interesting. You look at Microsoft's, trailing 12-month earnings, it's trading at 25 times earnings, while the rest of the S&P 500's at 30 plus. You know, I think it really does speak to the valuation being below where it should be right now. Like you said, $415 or so this morning. I think this is a $525 a share stock that's trading well below market. I think that they're going through essentially their AI moment that Google went through last, basically May and June. You know, ChatGPT was going to destroy Google's search business. What has happened since then? They've, increased their valuation by 80% last year, 22% this year. I think we're going to see a similar story with Microsoft, basically going through the similar sort of discussion with Anthropic. Every time they release a new plug-in agent service, their valuations have been dampened, but that'll come back.
I love to see this rally. We've had predictions of a 28% gain in profits this year for America's corporations. Never seen that before. I think that's part of what's going on here on Wall Street. Ted, it was great to have you with us. Come back soon, okay?
Thank you.
Good to see you, sir. Thank you.